Good morning, all of you, shareholders, colleagues, friends. First of all, it's a privilege to be able to speak to you in good health, albeit under mounting geopolitical tensions and the unspeakable, tragic act of belligerence that's taken place in Ukraine as young men are taking the streets and losing their lives. And we've barely been able to overcome the impact of COVID as new uncertainties are being introduced to the markets. And that will inevitably lead to more volatility as various indices indicate. Now, if we bring this all back to CLINUVEL, the question really is, we've seen a significant decline since the 23rd of September 2021 with a 12-month high of 43.58 to a 12-month low on the 24th of February, a few days ago, of 18.27. That's a decline of 58%, and that against the group that has posted year-on-year, quarter-on-quarter increase in revenues, profits, and return on equity. And so the question is justified whether this loss of value is just a mere reflection of the decline and the sell-off in the markets, or whether there's reason for concern at CLINUVEL. And I felt compelled to speak to you directly and address a number of questions that have been received by finance and investor relations team, and that I've grouped in three. The first theme is really relating to the position of CLINUVEL in the market. The second, the financial management, and third, the future, the near-term future of CLINUVEL. So let me start with the first. And I've been thinking the last few days how to best address this in the most objective manner and divorcing myself from CLINUVEL. And I have chosen to do it in two parts. To give you a historical account of two events of a follower in the market that allegedly would dominate the market of systemic photoprotective drugs, but also to share with you data of a head-on comparison of afamelanotide with a new drug candidate being tested in the phase 3, dersimelagon, and where the manufacturer itself published in December 21 data comparing afamelanotide with the small molecule dersimelagon. So if I take you back in time, in 2007, we received a phone call from an investment bank in North America that alarmed us that a new molecule, forskolin, a MC1R agonist, was being trialed in advanced clinical trials, so phase 2B, by a North American company, and that it had claimed superiority of afamelanotide. We were advised to out-license afamelanotide as an adjuvant to forskolin. Now, for the sake of time, 3 years later, this company was sold to a CRO, PPD, for value below its Series AA funding, and the scientists in Boston and Mass General Hospital proclaimed to the market that it would cease the further development of forskolin due to unexpected side effects. In 2010, we had a large North American company that presented at a investor conference at the same time that we presented our molecule afamelanotide, and to our surprise, the North American company presented its results on a prostaglandin E2 analog, also binding to the targeted receptor that we find in various organs and circulation of the diseases that we try to address. And this North American company also forewarned our existing shareholders in the audience and the new prospective shareholders that afamelanotide would be inferior to prostaglandin E2 analogues. Now, you can imagine that our shareholders left that meeting puzzled and miffed as to whether the company would succeed in bringing afamelanotide to market at all and commercialize. 3 years later, the same company in North America declared that it would discontinue the development of prostaglandin E2 analogues since it did not deem the commercial route viable. Now, most recently, some of you have posed a question whether the drug candidate dersimelagon in North America being tested in porphyria would pose as a competitor to afamelanotide, and even a sell-side analyst issued a page on this. Now, in my position, as much as I can, I will now take a much more objective stance and navigate on data that the manufacturer itself released in December 21, where a head-on comparison was made between afamelanotide as a natural biological hormone that we have in our body, but that was fortified to provoke the biological effect, versus dersimelagon, a small molecule. And it was found in the head-on analyses that our drug, afamelanotide, was 81 times more potent, meaning binding 81 times more to the melanocortin receptor than the small molecule dersimelagon. It was also found to be 145 times more potent, and since we also are interested in the MC4 receptor, it was found that afamelanotide is 165 times more likely to bind to MC1R than the dersimelagon. Now, with intent, we wanted to formulate our drug into a controlled release formulation, an implant that would be controllable, that would not lend itself to abuse, and therefore that would lower the safety hazard in the future. And safety hazard in drug development erodes eventually corporate value. Now, that in contrast to a pill that lends itself to abuse, that is not a risk that we are prepared to take. Now, if one makes a like-for-like comparison, which is necessary, as you know, we are dosing 60 milligram per 2 months versus the drug candidate that is being proposed or evaluated is dosed up to 300 milligram per day. The like-for-like comparison over 60 days, that is 18 grams, a factor 1100 times higher to be exposing patients to a drug. Now, our stance in drug development is that you need to dose patients as low as possible, expose them to as low as possible dose in order to provoke the effect, because long term you create a sustainable commercial entity. In summary, in choosing melanocortins, you choose a hormone that is already synthesized and recognized by the body. That was the sheer attraction to this company when we entered in 2005. Of course, an incumbent will always attract a follower, but with the superior family of molecules and hormones, and the superior route of administration, with a high bioavailability, which is essential in pharmacology, lowest effective dose, lowest frequency of dosing, the highest bioavailability and the highest potency. Now, we are reasonably confident at the moment that we have superior technology. And with that, we believe that we will attain and retain market leadership in systemic photoprotection. Now, let me now turn to the second topic, which is the financial management of the company. A number of questions really posed on our approach to financial management and capital markets, whether we will maintain it and the reason behind it. Well, in the context of the history, one needs to understand the approach to capital markets. The markets had lost confidence given the number of failed attempts, and we wanted to restore that confidence by demonstrating a proof of concept in 2 stages and attracting those investors that would have the longevity to see and sit it out. And as we've discussed before, to date, we've about 30% of the shareholders who've remained invested in the company more than 10 years. That's unusually long in this day and age. And if you add the 10 to 12% of board and management, that's about 40% that remain invested in this company. And so our job didn't stop at obtaining the breakthrough approvals for this asset in 2014 and 19 and entering the markets. The second stage of the proof of concept was really to show that we could commercialize this product successfully, because there are many products in the world that actually reach the markets but are not selling. And so once we started to commercialize in June 2016, our first goal was to demonstrate annual cash positivity. The second objective was to demonstrate profitability by retaining and constricting our expenditures, our variable costs. And as you know, we achieved that within 1 year entering the European market in 2017. We also wanted to see growth of assets, whereby the major component is the cash assets. And the cash reserves that you build serve as 2 functions. It indirectly communicates to the markets that you are not going to sequentially raise equity and further dilute. And as you know, our rate of dilution has been under 300% over 70 years, which is unusually low by following and maintaining this strategy. And the second function of these reserves is that you're able to weather the systemic and also seismic events in the markets, mostly unforeseen, as we've seen in the 7-9 GFC crisis, or the most recent COVID or current crisis. And that again communicates to the markets that we don't need to raise equity and discount the company further. In doing so, you attain independence and you control gradually the supply chain, which is, in my view, no longer a debate whether you need to do it or not in current times. So the approach has been translated to success to date, which is a year-on-year growth of 30% in revenues and profits, but a return on equity of 35%. So in answering your question, are we going to maintain this approach to finance and capital markets? For now, as we diversify, yes, but as the company morphs into a larger group, most likely in the future, no longer. Now I turn my focus to the third and final topic, that of the immediate or near-term future of CLINUVEL. I start off by saying that the business objectives of CLINUVEL have remained unchanged. We're establishing a diversified, integrated specialty pharmaceutical centered around melanocortins, a group of hormones which have ubiquitous use. And within that, we follow a triptych model. We wanted to demonstrate a clinical and commercial proof of concept in EPP, patients who are uniquely phototoxic to a broad wavelength of light, UVB, UVA, the blue and the green spectrum, that generate third-degree burns upon exposure and makes them lead an isolated and recluse life. And from the feedback we get over the years of use of SNES from physicians and patients, we cause a dramatic positive impact in their lives. And we see that back in the retention or adherence rate to the treatment year on year over 94%. Then we transitioned to XP, a long desired wish, but it took years to convince the regulatory authorities, the physicians, the decision makers, but also the patient organizations to convince them of the safety of SCENESSE. As we speak, we're evaluating SCENESSE, and our aim is not only to provide and show systemic photoprotection, but also to assist them in their DNA defect, the DNA reparative defect. Now, in our research over the years, we identified individuals among the general population, and these individuals are categorized in three. First, the individuals who professionally or recreationally need to expose themselves long-term to outdoors conditions and to solar radiation, preferably those that are near reflective surfaces, ice, snow, water, and sand. Then those individuals that have a compromised immune status, and then the third category, those individuals that who have either a personal history or a family history of skin cancer. Now, the question then arises, what would this dual strategy of focusing on melanocortins and high-risk populations do for this company, and why? Well, this strategy will fortify the global leadership in photoprotection, that's for one. And second, it will differentiate us from any other pharmaceutical in the world, because there is no other that focuses on melanocortins under one roof. Now, we spoke in the past about the integrated functions in the company, and by following this dual strategy, you cross-divisionally create synergies, but you also allow for a lower cost base, and eventually you're able to integrate not only all the functions in-house, but take control of the supply chain. Now, why is this strategy so exciting and value accretive? Now, first of all, there is no other pharmaceutical company in the world embarking on this journey. And by doing this, you differentiate yourself. So this is a specialty pharmaceutical. And rather than asking the question why we're doing it, we ask ourselves why not? We want to be in that void. The second, in doing so, we're creating new audiences. And they remain unaddressed, not spoken to. And we believe that we don't only have the know-how and the technology and the right to speak to these specialized consumer populations, but also we have the authority to speak about solar radiation and skin cancers coming from where we started. And third, we now have a long track record of executing with success at low cost. Now, if I summarize what we just discussed the last 10 minutes, by longitudinally managing the business risks and by adhering to prudent fiscal management, we've now arrived at the strongest financial position the company has ever been in. And of course, the incumbent will always attract followers in the market. But as I've shown you today, based on the data, based on the feedback, based on the experience, we believe that in choosing the group of melanocortins, we have superior technology, the natural ligand to the receptors that need to be addressed and occupied. And that will provide us leadership in photoprotection. Now, in rounding up, last year we shared with you that we would expend and had budgeted $175 million in new investments over 5 years, starting from financial year 21 up to financial year 25. And for those that closely follow the company, over the first 12 months of 2021, so at conclusion of financial year 21, we expended $22.7 million. Over the first 6 months of financial year 22, we expended $16.2 million, a total of $38.9 million. So we are now on track to stick with our budget. With the cash reserves that we're building, with the projected cash flows that are coming the coming years, we're quite confident that we will be establishing a B2B business which hinges on the medicinal products in the unmet need populations, as well as a B2C business for the specialized consumer groups that are not being addressed by any pharmaceutical or consumer company. And by doing so, we are creating new and wider audiences and more visibility to this company. So in conclusion, we firmly believe that this strategy will arguably lead to favorable economic outcomes and additional value over and beyond what you've already seen in EPP. So I thank you for your attention and support over the years, and I wish you much clarity in your investment decisions under these difficult circumstances. Thank you.